My dear friends, welcome to Rajshekar classes. This is lecture number 77. In this lecture, we will try to understand about wedge pattern. What is this wedge pattern? A wedge pattern is a chart pattern used in technical analysis to predict potential price reversals or continuations in financial markets. It is formed when price movements create converging trend lines resulting in a wedge-like shape on the chart. Just see, this is wedge-like shape. This is wedge. This is like wedge-like shape. What it says, just see, used in their technical analysis. What they indicate potential trend reversals or continuations. Anyway, we will try to understand what is a trend reversal and what is trend continuation. As it says, there are two type of wedges. One is rising wedge and another one is falling. We will try to understand. First, let us try to understand what is a wedge pattern. What is a wedge pattern? A wedge pattern is a technical analysis chart pattern used in trading to predict future price movements. It signals a potential reversal or continuation of current trend depending on its type and location in the trend. Yes, just see, a wedge pattern is formed by converging trend lines. This is one trend line. This is another trend line. It resembles triangle. Just see. It resembles triangles. This pattern resembles triangles, but slopes in particular direction. Anyway, what is the slope in particular direction? We will see. Volume typically decreases as pattern develops, isn't it? If you can check this while applying in real time charts, we will discuss all those things. Time being, let me explain like this. There are two types of wedge patterns. First one is a rising wedge pattern. What is this rising wedge pattern? Rising wedge is a bearish technical analysis pattern that signals a potential downward after a period of upward price movement. It is typically forms after an uptrend and is considered a reversal pattern, though it can also appear in downtrend as a continuation pattern. Just see, basically it is a bearish pattern. That's what it says. It's a bearish pattern formed when price makes higher highs and higher lows. You can see here, this is higher highs, these are higher lows, isn't it? Indicates weakening bullish momentum. That's what it says. It was uptrend, so it will make a reversal. It was uptrend. Just see, this is uptrend, reversal. For uptrend, it is reversal, isn't it? It was downtrend. Just see, it is downtrend. It is a continuation. This one. That's what it says. It may be reversal. It may be continuation. When will it be reversal? If it is uptrend. If it is uptrend like this, it is reversal. If it is downtrend like this, it is continuation, isn't it? That's what we are saying, isn't it? Yes, just characteristics of rising wedges. What are the characteristics? Just see these characteristics. Upward sloping trend lines. Just see, this one is upward sloping trend lines. That's what it says. Both support means this one is support trend line. Both support means lower and resistance. The resistant trend line means this is upper, isn't it? Both trend lines slope upward. They're just, if you observe both trend lines, whether it is support, that is lower, whether it is resistance, that is upper trend line, slope is upwards. That's what it says. The support line rises at steeper angle than the support line rises at a steeper angle than the resistance line, indicating weakening bullish momentum. This is more steeper. The supporting is more steeper than resistance, isn't it? And what is this? These I can say they are converging. These are converging trend lines. Just see this trend line and this trend line. They are converging. The price movement narrows, showing decreasing volatility. This indicates the buyers are losing control and breakout downward is likely. Decreasing volume tends to decrease as the pattern develops, signaling a lack of strong buying interest. A spike in volume often confirms the breakdown when the prices moves below the lower trend line. Breakout to downside when the price breaks below the lower trend line. Just when the price break the below the lower trend line, it is usually signals a strong bearish movement, isn't it? Traders consider this is a selling opportunity. Yes, this is what is this falling wedge pattern? The falling wedge, just see, the falling wedge pattern is a bullish chart pattern. That is important. It is bullish chart pattern that signals a potential reversal or continuation of an uptrend in stock price movements. It is formed when the price makes lower highs. Just see, this is lower highs and lower lows. This is important. Yes, let me repeat, it is formed when the price makes lower highs and lower lows while the range narrows, creating a wedge shaped sloping downwards. This is falling. This wedge is falling, isn't it? That's why it's a falling wedge. Yes. What are the characteristics? What are the characteristics of this particular pattern? First one is, just check these characteristics. What downward sloping lines? What are the downward sloping lines? Just see, this is downward sloping line, isn't it? This is a downward sloping line. You can understand. The price moves within. What is downward sloping lines means? The price moves within two converging trend lines, both sloping downwards. Decreasing volume, trading volume generally declines as the pattern develops, indicating weakening selling pressure. Breakout direction, a bullish breakout occurs when the price breaks above the uptrend. This is bullish when the price breaks above the uptrend, isn't it? Confirmation, a breakout with increased volume strengthens validity of the pattern. Just you can understand, this one is bullish trend, this one is bearish trend, isn't it? Yes, this is simple. Just go through it. Wedge patterns provide valuable insights into potential price movements. Rising wedges are bearish, means falling wedges are bullish, isn't it? That is important. Rising wedges are bearish and falling edges are bullish. Proper risk management is essential when trading these patterns. Practice identifying wedges in different market conditions. Anyway, we will take different companies' chart patterns and we will analyze all these things. Thank you very much.